Hey, it's Mike Watson with Keller Williams, and here is your real estate market update for January 2024. In January, we had 380 homes come on the market. As you can see, that's almost a 66% increase versus December. It's also a 7.3% increase versus last January. So December had its seasonality, right? Very few homes came on the market. It had a lot to do with interest rates as well. So that's why we had such a big spike month over month. But year over year, we did have a good increase at 7.3%. However, our total number of homes for sale during January was only 715. That is a very low number of homes. For the number of homes that went into escrow, we had 292. You can see that's up almost 30% versus December. Again, seasonality, but it was up 2.8% year over year, which is fantastic. Again, that's showing more demand in the marketplace. Number of homes that sold, though, this is a different story. So we had 209 homes sell in January. That was down nearly 22% versus December, and it was down almost 11% compared to last year. I believe the reason for this is that in October, we hit record high interest rates at like 8%, and by record, I mean for the last 20 years. It was a record. A 60-year historical average is 7%. So we were above the average line, but we were much higher than what we were used to. And I think that caused a lot less buyers to go into escrow during the holidays than normal. And once rates fell back down a little bit, we got more people to purchase homes in December, but we still ended up really low. And this January, at 209 was the lowest number of homes that we have ever had sell in a single month. Was crazy. But you just saw that the number of homes going into escrow is up. So we are good. And with that, the average selling price is at $467,000. Again, it's down 4.25% from December, which was our second or third highest average selling price ever. But it's still up almost 6% year over year. So even with fewer homes going into escrow, with interest rates skyrocketing, we still ended up almost 6% higher than we did last year. So the market is doing very well, and I don't see why anybody would reasonably expect a correction in the coming year or longer. The average monthly payment went down 5.75% to $3,600. And that is up 9.5% versus last year. So our selling price is up nearly 6%, and the monthly payment is up 9.5%, and that's due to the rise of interest rates. But again, they are coming back down as we speak. The average days on market for January went up. Again, pretty significantly versus December at almost 20%, but year over year, we're down 17.25%. So again, we had fewer homes on the market and the demand is higher. So year over year, the time on market is 17% less, which is good and healthy for our market. And I say this probably every month, but anything under 120 days is a healthy market. Anything over 120 days is somewhat stagnant and leaning towards a buyer's market for sure. The month's worth of inventory is at 235. You can see that was down 329 versus December and down 5.6 versus last year. Percentages of a very small number like this don't mean much. I believe that last month we were at 2.36 months. And what that means is if another home doesn't come on the market and we continue to sell the average number of homes that we do monthly, that in less than 2.5 months, we wouldn't have any homes to sell. And again, the average or balanced for our area is about 6 months. So anything less than 6 months still leans towards the seller's favor. Anything over 6 months leans towards the buyer's favor as far as negotiating goes. Anyway, the market did really well. I can't believe that we are already finished with January. If you have any questions, feel free to call, text, or email, and I will talk to you soon.